Hello everyone, today is Tuesday, August 25th, 2020. My name is Evan and welcome back to another midweek market recap video. We're going to jump right into our technicals dashboard here. You can see stocks on the session were mostly positive here, just the Dow Jones into slightly negative territory, Q's out in front leading. And if we look at the 5-day change numbers, you can see once again here, Q's out in front leading, but it's a pretty close race with the Dow and SPY right behind. IWM is the only index that is negative, but it's basically flat over the past 5 trading sessions. It's also the only of the major indices below its 10 SMA currently. We are above the 50 and the 200 SMA across the board. If we scroll down and take a look at sectors here, technology is back to the top of the stack here, running away with it. Communication services, number 2. Consumer discretionary, number 3. And on the downside, we have energy, we have biotech, and we have utilities are the underperformers and in red here over the past 5 trading sessions. In terms of major markets, it's pretty quiet out there, but VIX at 2.93% is the top of the list with the SPY S&P 500 right underneath it. So an interesting little, top 2 right there, but the VIX pop there is pretty mild. Natural gas rounding out the top 3. And on the downside, commodities, gold, silver, metals specifically are the underperformers. So let's jump into the charts here. Let's take a look at what's going on. We do our long form market recap videos on Friday where we spend a good amount of time going through all of the analysis. And when we do these midweek videos, they're meant to be shorter and try and highlight the things that are changed from Friday's video, and there's not a whole lot that changed. So I think a lot of the notes here that we made on Friday pretty much still stand. If we look at our equity market grid, and for those of you who are new, I always like to first welcome to the video and also like to sort of give the lay of the land of the charts. So the green, yellow, red dots are smart trend filters. They're a custom volume and price-based indicator that measure trend and trend strength. Price is the white dashed lines on all of these charts. So when we look here at the weekly time frame, there's been no change to our picture here. Our outlook has remained basically bullish on all S&P, Nasdaq, IWM, and ACWX for the past several months. Nothing's changed there. If we go down to a daily chart, there's basically been no change here as well. We did have, so I do want to bring your attention to the Russell 2000 down here. So remember last Friday, when we did our video, we talked about how this went neutral on Friday. So it went from green bullish to let's pause and just kind of wait and see, giving the benefit of the doubt to the buyers. You can see we had a second day print on Monday of neutral, and then today it went back to bullish. So this trend here is back in full force, so to speak, and we're going to see if buyers can potentially rotate into IWM later this week. That's one of the themes we're going to talk about. ACWX in the bottom right, pretty similar here. We had a couple of neutral bars being printed on the daily time frame. That moved up to bullish here in today's session. So let's jump into the specific price action here. This is basically the grid that we've been kind of looking at and talking about. When we ended Friday's video here, you can see that we closed at new all-time highs. That was the story from last week. S&P 500 finally clawing back to its February or January all-time highs from earlier this year. We did break out to new highs. We gapped up on Monday, and we continued to press into those new highs. And you can see we once again closed at a new high here on Tuesday. So there is no overhead supply. There are no resistance levels, organic resistance levels to actually, measure, think about, and put on our charts anymore. It's only, the downside now that we can measure out. And basically here, this 33.86, those were the prior closing highs. So certainly this band in here, I've never seen colors that look like that on my TC 2000. That's pretty interesting here. So what what we can actually do here is kind of just plot out this band of 33.94. You can see all the way up to here. This is generally speaking going to be the level that you want to see hold in the market going forward. So this is what I think for you shorter term traders specifically want to be paying attention to. If we were to suddenly lose this, then that might give us a wait, look, and see, potential reversal, rotation, pullback, something more severe. If we start to lose 3,400, I think that's the great line in the sand to use right now. Quite frankly, I think that's pretty much what we have to measure at this point. If we start falling below there, then things get more dicey back into these old levels. But we'll take that one step at a time. This would bring us to about a 1.69% sell-off, which frankly could happen in a day if there was a meaningful new catalyst that the market needs to start to reprice in. So let's keep it in mind. It's certainly not unreasonable to think that we can't see some knee-jerk rug pull back down to retest this zone, but just under that 3,400, that's the key level I would be looking at. Now, the Russell 2000 I think is quite interesting here because the Russell 2000 isn't as extended to the upside, isn't closing at new highs. In fact, it's still let's see if we can get a close approximation. It looks like it's about, give or take 9%, about 9% off of its all-time highs. So it hasn't quite made it up there. However, it has been behaving pretty well technically. In fact, it broke out 3 weeks ago, 2.5 weeks ago, above the June highs here, this 153. It came back basically to nearly to the penny, retesting it. Buyers seem to arrive right where they needed to, and this is starting to lift higher here. So the Russell 2000, it's the underperformer over the past couple of weeks, but from a technical perspective, it's still making higher highs here. It's holding up in its trend, and this is certainly a place where if you ask yourself, well, what continues this market? How does this market continue to move higher? And the answer is probably rotation into small caps. These are things like financials, energy, even the biotech or healthcare, smaller names. That I think is and some industrials. Would be some of the stocks to keep an eye on here if this does pan out. It doesn't have to pan out, of course. This can continue to lag. Tech can continue to just romp and stomp to the upside, and quite frankly, that's how a lot of this recovery has taken place. So IWM, let's keep an eye on it. 153 to the downside. That's your line in the sand. On the upside here, get some good momentum going, is over 159. We'll see if that can happen, into the next couple of weeks. Nasdaq 100, here it is, continues to act strong and continues to be our leadership group. No change there. It's extending to new highs here, and really just acting well technically. A few weeks ago, everyone was seemingly calling for the top here in tech and for the big rollover and the underperformance when the Nasdaq started to move sideways in this zone here in late July, early August, and here we are back to new all-time highs. We are absolutely stretched on most traditional metrics, and especially when we look at some of the individual components in here. The largest company in the world that's moving higher at a 40% clip in about 2 weeks, adding I don't even know how many hundreds of billions of dollars of market cap in that amount of time, but super extraordinary and certainly unique that we haven't seen before. You can throw Tesla in there. You can throw Facebook moving today. So lots of this concentration is continuing to still happen here in the Qs. It is a potential risk for down the road. The rubber does meet the road at some point, but it's been tough to bet against it. And, the path of least resistance here is still higher. So I'm going to follow the trends and price action for now until there's more meaningful reversals or indication that this has run its course or topped out. I think it certainly pays to sort of try and align yourself to what's working, and certainly have risk management and stops in place to mitigate any complacency. So that's pretty much it. Actually, I do want to touch on the Dow, because the Dow was one of the ones. I don't know that we focused it too much on the video on Friday, but posted a few charts on social media about how this being pretty much a perfect textbook pattern here where we had a breakout of a month and a half, 2-month range. We rallied higher, extended ourselves. We just basically corrected mostly through time over a period of about a little over a week's worth of trading, and then we launched higher here on Monday. So we had this beautiful breakout, and again seeing some rotation into the Dow, which isn't back at all-time highs yet either. In fact, it's just trying to get back up into this old gap here. So remember with the S&P, we talked about its gap from the 24th. Now that the Dow is basically knocking on its door, I wouldn't be surprised to see the gap filled. Wouldn't be surprised to see the Dow making new highs in the next couple of weeks here as well. So that is the outlook. That's what's going on there for the broad market. Let's go through some of the other screens here. Bottom left, VIX still in a bear trend. TLT neutral here on the weekly chart. Let's go to our daily chart views. You can see TLT pulling back today, down 77 basis points. So you can see this bearish trend here on the daily chart still taking hold. This signaled originally back here on the 12th. Price still seems to be kind of struggling in the near term. So let's let that play itself out. Let's see, how much conviction the sellers can have here. I think ultimately with TLT rolling over with yields rising, that's probably, again, not an economist and I try not to play one, but probably a good thing to see, just the bond safety haven starting to roll over a little bit, and then perhaps your rotation into more of a broad-based, smaller cap IWM, Dow Jones, or something to that effect might start to lend itself now. So let's pay attention to those correlations. But for now, TLT starting to roll over a bit, and we look here at GLD and silver. You can see on our weekly time frame, these have been in bullish trends. Those aren't going to change anytime soon. But the daily charts on both of these, you can see GLD printed its first sort of bearish transition. We talked about this in our last video. It had this little blip over here, which ended up basically being a false signal. But beyond that, you'd have to go all the way back to March before you saw a sell signal here on the daily chart. It's kind of persisting in the near term. So GLD seems to be trying to find its footing. Again, the weekly backdrop is bullish. So you have disagreement here. You have a short-term pullback in the context of a longer-term uptrend. So let's keep an eye on that. Silver's pretty much the same thing, only it's neutral here. It hasn't transitioned over to bearish just yet. So a couple of the charts I also wanted to talk about as we round out this video, because we talked about energy last week, and basically we can see energy is kind of still doing the same thing. We talked about, I believe this went into bearish trend, yes, on Friday. So this was something we mentioned in our last video update. This went bearish trend on Friday, but you can see Monday it bounced right back to neutral. Today it's back to neutral. So it's kind of still a very dicey situation here with energy. It's basically sideways, and you got to be careful not to get chopped up. So let's pay attention to this, but I think this is an interesting space for, again, rotation and a bigger move in the next several weeks to a month. XLF, we talked about this also last week. So if you recall, this printed a bearish signal here on Friday. It went neutral on Monday, and still neutral here today on Tuesday, but you can see from a price action perspective, it actually rallied pretty nicely here from the from this little pullback or channel lower, and you can see it did do it with some increasing volume and a little expansion in range. So financials interesting there. And last but not least is Biotech. Biotech has been in a tough period for really a couple of months. It's been sort of consolidating. It was one of the best performing out of the initial rally and the lows of the first quarter carnage, but since about May it's basically gone nowhere, and it sold off yesterday down 1.17%, but then it rebounded, recovered most of that action today. So we'll see. It looks like it might be trying to stick some type of low here. I certainly hope so, just because I have a good amount of exposure in this sector, not the ETF, but just individual components. So I'm rooting for this to sort of find some type of bottom here, but jury's still out, and it's still in a tough spot, and it still has some more work to do. Overall, though, if you're zooming out from a bigger picture perspective, it does seem like this is a decent spot for buyers, for the cavalry to sort of arrive to support this market back to the upside. So we'll see if that happens. And I think that's it. So that's everything that I wanted to cover. Hopefully you guys are doing well out there in the start of this new week. What are you watching? What caught your eye this week? It is only Tuesday, but is there anything that you're paying attention to? Anything that you missed here? I'd love to hear it in the comments below. And besides that, if you are enjoying these videos, make sure you are subscribed to our YouTube channel, and you can also follow all of the updates on our website at The Trade Risk. So thank you so much for tuning in, and we'll see you in the next video update, which is tomorrow during the market session for some trade ideas. Thanks so much.